Hello guys, welcome again to my channel. If you are new, kindly hit the like button and click that subscribe button so you won't miss my new uploads. With that being said, let's get started. For today's video, I'm going to share with you another easy and simple trading strategy that is known to be highly profitable without even using any indicators. This strategy relies mostly on price action, candlestick patterns, and support and resistance, okay? This strategy that I'm going to share with you only uses trend lines. So what is a trend line? Trend line, for those who are new to trading, is defined in books as a line that acts as a support or resistance. To elaborate more, first, let me discuss the three types of trend lines. Horizontal trend line, as the name implies, is a horizontal line that represents a trend. So in the horizontal trend line, the trend is sideways. Because as you can see here, the price action is moving in these two lines that represents the support, lower line, and resistance, upper line. The price has no direction at all, hence sideways. Take note, we can only consider a line a trend line if it is touched by the price action at least 2 times. The trend line is where the price reacts when it reaches that price. The price action should bounce or move to the opposite direction once it reaches that line. Just remember, the upper line is the resistance and the lower line is the support. The second type of trend line is the diagonal trend line. As the name implies, this is a diagonal trend line. Now, diagonal trend lines can be parallel in form, which is having both trend lines running in the same direction with no chance of intersecting. Or, diagonal trend lines can be formed by 2 intersecting lines. And the last type is dynamic trend lines. This is a trend line that follows the price action. One example of this is using the moving average indicator. As you can see in this chart that the trend line is following the direction of the price. We can consider it a resistance if the price action is below the trend line. And if the price action is above the trend line, we can consider it as a support. Alright, that's a brief discussion on trend lines. We will not dive more into it. So for this video, we are going to focus on using the horizontal and diagonal trend lines on this strategy. First, I'm going to teach you how to draw a trend line. Go to the chart. Trend lines manifested on all time frames. 1 minute to 15 minute time frame will show you short-term trends. The 1 hour to 4 hour time frame will show you the mid-term trend, and the daily and weekly time frame will show you long-term trends. How to properly draw a trend line? A perfect chart setup relies on the number of candles shown on your screen. The required candle count should exceed 300 bars. You need to zoom it out to accommodate at least 300 bars in one display. Start locating high price action from the chart. Once you see it, go connect it using the trend line you have. Now, look below the chart you created. You must also connect the lower price action to create a line. Now, you know how to draw a trend line. Let's proceed with the trading strategies. Later in this video, I'm going to introduce to you different trading strategies that you can take. I will teach you where to enter, where to put your stop loss, and where to take profit. Disclaimer, this is not financial advice. This is purely for educational purposes. Now, if you want to try this strategy, that is 100% on you. Your money, your rules. Now that I've said that, let me show you the first trading strategy using the trend lines. This strategy is a trend following. It means that once you determine the trend, you will only look for entry signals in the same direction. For example, look at this chart. We have drawn the trend lines, and we can see that the price action has been rejected on the 5th circle. This means that the market is not yet ready. At this point, we can wait for another pullback on lower trend lines. After the pullback, we should start looking for candle patterns for our entry. We can see a bullish pin bar has manifested. We can enter right there, just after the closing of the candle. Then we can set our stop loss a little lower than the previous swing so it won't stop out when it tries to visit that price again. For our target profit, we should measure the distance of the trend line from the middle section. This gives us a safe and conservative target. The next strategy that I'm going to share with you is a trend reversal strategy. This strategy is best used in a trading pattern where the trend is ending and preparing to enter into a new and opposite trend. We can approach this pattern in 2 ways. First is entering after a successful breakout, and second is entering on retest or pullbacks after the breakout. Look at this chart. We are going to apply the first approach here. After we successfully draw the trend lines, we will wait for the breakout. A successful breakout is shown when a strong candle pairs the trend line. Now, To confirm that this is a strong breakout, it should be followed by another candle of the same color. In this case, the color green. The best entry will be on the next candle after the confirmation candle, right here. Place your entry at the candle close. For the stop loss, put it on the previous swing. This is the price where the pattern gets invalidated. Now for target profit. First, you need to measure the distance between the two trend lines. This is the same measurements for the profit. After you measure, have a copy of it, then drag the line at the entry price. Now you can see where to place your exit. Let's move on to the next chart. Now in this chart, we will apply the second approach. After we successfully draw the trend lines, we will wait for the breakout. But in this approach, we will not enter after the breakout. This approach is considered safer than the previous, with low risk also. So where to enter? After the breakout, we will wait for the price action to pull back to the trend line that it breaks out. The price should bounce on the trend line and show no intention of going back inside the pattern. In this way, we can say that it is ready for a new trend. We can start looking for a candlestick pattern for our entry. Now in this chart, we can see that there is a bullish pin bar at the exact pullback on the trend line. This shows strong rejection from going back inside the two trend lines. The pin bar should be confirmed with another candle. After the confirmation candle, we can now place our entry on the candle after it. For our stop loss and target profit, we can set it up the same with the previous approach. The beauty of this strategy relies on the market trend. Once you capture a trade on a trending market, you can gain big profits. You can backtest this strategy on your own so you can see how profitable it is. Again, disclaimer, this is not financial advice. This is pure for educational purposes only. Your money, your rules. Now, if you like this video, please hit the like button and subscribe to our channel so you don't miss any videos like this. Until next time, see you.